down below yesterday's range. Now the market's only down about 1.5%, but it does make it slightly more tricky. Like we had a rest day yesterday, which is normal after a really, really big trend day. I mean, it was a big trend day, on Friday. Like you didn't have a single break over the MAs for the whole day. Like you had a 20 MA rider the whole damn day, right? So when you have something like that, it's really natural to have a rest day, after that, and then what happens is if you can break the range of the rest day, then you have like that continued downside. So we do have that. Now the gap kind of takes it into a little bit of a trickier situation because, we may have to come back and fill some of the gap or, wait out the open slightly because you don't want to chase down, like if all of the stocks on your watch list are down 2, 3, 4, 5, 6, 7% or whatever it might be, then it'll be a little bit more tricky. But it doesn't mean that it's untradeable. What we do have to do is kind of trade around these levels over here. And so we'll see if this comes back and refills some of this gap, or if we even hold at this level over here. And that may not even happen. We may just ORB down and, come into, and start kind of trending down. And maybe we come back and kind of retest these June lows, which could be in the cards. We don't necessarily know yet, but it looks like, so far our nice kind of 3-4 day bounce in the market has definitely faded off, and we are under all our EMAs, and you can even see the 9 EMAs starting to curl down a little bit. So that'll be something to just be mindful of. Let's take a look at the market breadth. We didn't have really much action, yesterday. So if you're looking at breakouts, we had 122, 4% breakouts, and a little rise in the breakdown. So the market breadth has been deteriorating the last couple of days. That's to be expected based on Friday's action anyways, or Monday's action, whatever this big down day was. I think it was Monday. So now we'll start to see kind of what's happening here. But we do need to see these turn into kind of hanging chads and turn back this way. Otherwise, it's going to be a big clusterfuck for the rest of the week. We need to see how these last lows hold up. Let's take a look at see if there's any good earnings plays, anything along that end, and then we'll come back and kind of look at our regular large cap stocks and see if there's anything juicy coming on into these. So let's go into this here real quick. Whoa. Refresh, bastard. Hold on here. Hold on, let me refresh my TC2000 here, buddy. Sometimes you gotta just give it a little bit of a whirl. Fuck RH. I'm just kidding. You could probably trade it. If you're look, if you're trading only say 200 shares of it, liquidity doesn't matter as much. When we talk about liquidity, it's really it becomes more of a matter when you're trading 1,000 shares of something. If you're fucking around trading 200 shares or something, I mean, you can take really big rips, trading sometimes slightly illiquid stocks that have really big range. You just have to trade it smaller, right? So, something like this is okay, you can see here, you've got 1, 2, 3, 4, 5, 6, 7, up downgrades, 8 downgrades, 9 downgrades, right? So this is you can see you're getting all these companies downgrade this thing. They revise fiscal guidance with the deteriorating macro. Shocker, right? People are tired of buying $50,000 couches, $40,000 couches. No, right? Woe upon me, right? So that's going to be, you could definitely add something like that. You could add something like that. it doesn't really matter. Like, you can play this stuff. You just have to deal with the spread. Like, you just have to level in a little bit better. So when you have a stock with like a big spread like this, it's going to be like, say, $1. You may have to use limit orders. If you use market order on something that's got like a bigger spread, then, like you may have to go and say you wanted 500 shares. Like you may have to level in 100 shares at a time. If you wanted to do 100 shares, you might have to level in, let's say 20 shares at a time and get yourself like a nice average on it. Or you can use a limit order, but if you use the limit order, right, it's like you may be waiting minutes to get filled. So just something to kind of keep mind of. You've got a whole host of these small cap stocks. A lot of little biotech's been popping up lately, right? So you see something like this. Not really my flavor. Your red cock also popping up here. This is probably just a pump and dump, as you can see here. Like this is already deflated down. It's just hitting some level of, it's probably hitting some level of support, and they're going to try to push this thing up. But this is not really. I'd be surprised if this holds. Hey, Mr. Morgan, what's going on? Rev, right? These are dead cat bounces. What we call this is like more like a sucker's bounce. You've already collapsed, and now like you'll start to put out PRs or start to gap up. Mostly it's a lot of times it's like chat rooms and stuff like that, and they'll pop it up for a little bit, but it's just a liquidity trap. It's already collapsed. Like it's not. They don't come back. Biddy. So this is the pro share short Bitcoin. That's kind of cool. Like if you wanted to short some Bitcoin, this could be something, but I don't know if that's going to have any juice on it for us. So these are the 3x ETS for inverse ETS for semiconductors. I think that, probably those look like they're breaking out. See, like you've got SPXU. Whenever you're looking at the market, by the way, it's good to look at these kind of inverse ETFs. It'll give you like a gauge of how the market is looking in like another angle. What I mean by that is like, for example, so this is SPXU. So this is a short S&P 500. Like a couple days ago, like when the market was going like this, like we all felt pretty bullish about things, right? They're like, oh, things are turning up, right? But it's still like a bear market. Sometimes you're like, hey, things are turning up. It feels good. It looks good. But then, like you're right, the market rolls over and you're like, what the fuck? But like, if you end up right looking at kind of the opposite of that, right? The inverse ETF, you'll see, right? You'll see like this was just a trend trade on the opposite side, right? Like breakout, pull back, and it's been bouncing off this level for a little bit here, right? For the last 2 months. So these end up just being trend trades that follow through. That's always an easy way to look at things. You can add those to your index list on your TC 2000. If we can just add them in if right. That way you can just like see it on the other side. So you can add those to your index list, and that'll give you kind of a little bit of a different look at things. It helps for the most part, just kind of like train your eyes, because a lot of times people's eyes are trained to see just longs. It's easier to see trends on the long side than the short side just from practice stuff, right? Like you don't have practice seeing them on the short side. So you can use these like inverse ETFs to just kind of help train your brain to different stuff. I would stay away from pretty much all small caps for the most part today. You see, there's really nothing on the PR side. Like if you really need a PR play, this NRSN is really the only one that's pop-a-locking, right? Neurosense Therapeutics says biomarker study supports combination drugs potential to treat Alzheimer's. Fucking, you tell me what $2 biotech stock is not involved in Alzheimer's drugs. This does have a history of making this kind of move, but you do need the right kind of conditions of, you need the right PR, the right pumpers, and the right juice to get it going. But this will probably have some range today. Like if you're searching around and you're like, fuck, I don't want to trade these indexes anymore, index kind of names, then you can definitely you could trade something like that and get it going. So that'll be something you can definitely add in. If you want a little small guy, you can go in with something like that. I probably will stay away from it for the most part. Now let's see on the downside if we got any little PR plays happening. right? So Restoration Hardware, they release their earnings early. This is probably something we can play if the liquidity looks okay. Definitely worth a gander. You can see like these Bitcoin stocks, they're all rolling over. Bitcoin itself is rolling over. See like something like this Albertson, this is also like a nice triple tap breakdown. You know, you can have something like this too. This probably has a lot of room to fall. If you go back on this, right? So this 26 is going back over basically about a year, right? Give or take about 9 months. So it's been hitting this 26 nonstop. So you can see here, if you lose that area, now you've got yourself, right? Now you've got yourself a nice location to get shredded on. Something like that actually can work. It's already got enough liquidity in the pre-market and you got a good level to trade around. I like those. Like, you know, if it ends up, you know, if the liquidity stays in, you know, that ends up being like a really easy, right? It ends up being like a really easy short. Polestar, man, what a name, right? Polestar. It's like something like a stripper would put like on her Instagram profile, right? Like Polestar. Man, I'd like to meet somebody that says that. That just sounds like a good time. Mara turd. Hey, this blue was like a big, you know, runner yesterday, but I wouldn't trust something like this either. Coin looks like, you know, coin could get shredded today. I'll tell you what, like if you look at this, and it's hard to see with the scale because it's down so fucking much. Sometimes if you can't see on the scale on a chart, go from arithmetic to logarithmic. It just changes the way it calculates, right? It changes the scale on this side. So what often happens, this happens on big gap plays too. If you have a big gap down or gap up on a stock, change the scale from arithmetic to logarithmic, and you'll be able to see the chart. It'll uncompress the chart for you so you can see the angles a little bit better. So you can see like you're starting to get into, right, like some spots here where you're going to be breaking down that could take you into a suction, you know, down into here. Now it is down 4 days in a row, and bear markets, that doesn't mean as much, but you know, that'll be something to kind of trade around too. I think we fucking shred that thing too. Let's add that to the list. I like that. You know, I like when you have like nice, easy levels around stuff too. FNG, junk. These are all ETFs. Walgreens and fiscal adjusted EPS, deadline reaffirmed. You know, something like this also has like a breakdown spot here. Now, this will be probably a little bit illiquid today, but it normally, actually, it won't be. It's just illiquid this morning. You've got a level on something like this, like you could trade around that too. You see there, you got like the third test on this bad boy, give or take a few pennies here or there. That's going to be really nasty. Ooh, BBWs. It's really annoying shorting those $3-4 stuffs. Cut. Cut. Yes, so Carnival had right, they had a PR out yesterday. They did get shredded at the open, so you're seeing like a breakdown in these cruise lines after their dead cat bounce. I think this RCL actually has a level here that we could trade around at the 35 spot. I think this is probably something we could trade here. I'd add that. There's no liquidity in it right now, but it usually does come in. You can see yesterday, like it traded at 11 million shares. So you do have some level of liquidity on it. CCL has just a lot more. The interesting part of this last dump is a lot of the commodity stocks have been rolling over for some time, but now oil's getting shot too. So you're seeing kind of the last dredges of, right, the run in commodities as they're starting to kind of roll over here. So you're seeing like that's a breakdown in AA. You have a breakdown in CLF. You know, even Oxy, right, started to roll over yesterday. So you have breakdown some oil names. Oil itself also down a little bit here. So you had a dead cat bounce into the 20 SMA yesterday. Now you're starting to roll over and see the gap up. This is when you know like oil's under pressure. Like, you know, this like gap up faded off really easily. So you've got almost like a rollover pattern over here. And it's already happened in natural gas. and you're starting this, right? You've already seen it in the steel and the other commodities, right? Like mosaic, right? These things have already all been cut in half. So that kind of right commodity pressure is at least gone from the market. You would think that'd be actually like there's something that's really bullish for the market, but the market has not reacted to it because we're really still like in a liquidation type of mode where any strength is just getting faded off for cash. David, ENDP, well, ENDP was a pump and dump, so they always die. That's just the way it goes. You can't read volume and stuff on pump and dumps anymore because it's all just manufactured. Frankly, they all have the volume. So volume doesn't mean anything for small caps anymore. Actually, if you see a lot of volume, it usually means it's the end of it. This will be back at the 10. This will be back 10 cents or whatever. But yeah, there's no probably reason beyond it. It's just a pump and dump, and that's what they do. As small caps, remember, like you don't need news to go down. After they start flying, the people that pump it sell it, and then it goes down. And then the suckers are left holding the bag. That's why you rarely want to hold those things for more than an hour. I mean, it's hard to put a time limit on it, but rarely more than an hour or two, because that rug is always coming. And you're either rugging or getting rugged, or you shredding or getting shredded. That's just nature of trading. You can shred, you can be shredding, or you can get shredded. The first two are good, the last one is bad. That's the way it goes. And that's for us normal, good, God-fearing Christian people. For the other side of traders, it's you're either rugging or you're getting rugged, right? That's in small cap world. You're rugging, meaning you're pumping. Even if you got like 10 people you're pumping to, right? It don't matter. You got to be pumping. Otherwise, you're getting rugged, right? You either pump it or you dump it. Hopefully you're doing both, but you're doing it before the third, which is getting dumped on. Does that make sense? Comprende. That's Spanish for comprende. Now, let's take a look and see what else we got here. UPST does have a level here, Armando de Santos.
We're gonna start with NRSN.
Yeah, you got a level over there. You can trade around. Baba, you could possibly trade around too. The issue with this is you got the support underneath. Yeah, I think the easier plays is probably just right. We've already broke down on this one, and
I like TRPI.
We've already broke. We're about to break down on this one right off the gate.
A little bit cleaner today. That's gonna be our top watch today, guys. We're gonna do Rev B and RSN top two probably. I do like ASPN as well. A little gap there. NRSN, guys, NRSN. We're gonna nail this one.
Oh, fucking move that thing there. And watch this. Hey, this Nvidia's been dumping the first candle. Watch that pre-market low 151. Sometimes they're just sometimes they're getting shredded like right at those spots, and it's not much you can do on it. AMD did get an upgrade, but I don't expect it to probably
be.
I don't expect it to do much because it may pop for a hot second, but you could get faded over. Like usually you need multiple of these things, and then also like who the fuck is Northland Capital? Like why are you not Southland Capital? What about Westland Capital? What about Eastland Capital? Right? Like you might as well be, you could be that guy could be anybody. He could be a guy sitting in his room right now, and he's like, man, my mom says I need a job. I'm gonna call my company Northland Capital and do some upgrades, right? It don't mean anything because nowadays, like anything could get picked up on the Benzinga wire or whatever. So this may actually have a little bit of a pop because the market probably is going to, fill some of its gap anyways. So that it could have a little bit of a pop at the open, but who knows how long it sticks. I'd probably stay away from that. On the other side, crypto's also dumping. Ethereum, big bear flag. Bitcoin looks like a rollover, a slow rollover right now. Man, I thought last time the bounce might hold for a little bit, but I said that a few times. You know, Ethereum looks like a nasty little bear flag too. So probably stay away from all these. Probably stay away from all the cryptos for now. It's been a tough market unless you're shorting, you know, into the pops and all that kind of fun stuff. Now let's go have some fun. Yesterday was boring. Beyond the first 15 minutes, like there wasn't really much action going on.
I guess.
But I
Hopefully
think today
we
we'll
get
have a
some
little
better
bit
action
more.
yesterday.
So let's go do what we do.
And they dropped